Hello viewers, welcome to my channel. I'm Hasham Ali Khan. This is the last video on unit number 2 in financial institutions and markets. So far many videos I have uploaded on this unit number 2, that is financial institutions. And the last video I have completed on leasing, hire purchase and leasing. I've explained you in complete detail regarding hire purchase and difference between hire purchase and leasing, and what is the meaning of the term leasing, features of leasing, advantages, disadvantages of leasing, types of lease. All these things I have already uploaded in the previous videos. So if you are interested in getting a complete command on this subject of financial institutions and market, watch all the videos from beginning till end. Not once, twice, thrice. If you watch, definitely you can be able to get the complete conceptual clarity. If you have not watched the earlier videos, I suggest you go to the playlist of my channel. Select the subject financial institutions and markets. Watch the earlier videos. Be perfect on these concepts. Now in this video, this is the last video. In this video, I'm going to explain you about NBFC, non-banking financial companies. And what are the different types of NBFCs? Very frequently examination I have seen in previous year question papers. Frequently they will ask in different universities regarding what is NBFC, what is the meaning of NBFC, and what are the types of NBFC. So before explaining this NBFC, take the screenshot of the points which I have written on the board. Then I'll explain. Now, this NBFC, the full form of NBFC is non-banking financial companies, and it is also termed as non-banking financial corporations or non-banking financial institutions. They are just like banks but do not perform all the functions of a bank. That's why it is called non-banking. It is not a bank, but performs similar functions as that of a bank. So it's a company which is predominantly engaged in the financial activity, but which is not a bank. Most of the activities of these NBFCs are financial activity, but it is not a bank. Bank, all the activities are financial, but NBFC, all the activities are financial, but it is not a bank. Now, in other words, it performs at least some of the functions of bank, but does not have a banking license. They don't have a banking license to perform banking activities, but they are performing the similar activities as that of a bank. They don't have a banking license. It is not called a banking company. It is a non-banking company. Now, an NBFC may or may not accept deposits. However, it cannot accept savings and current deposits. In other words, it cannot assure its depositor that the money is returnable on demand. One point is there. These NBFCs may accept a deposit or may not accept a deposit. Even if they accept a deposit, they can accept only term deposits. They cannot accept saving deposits. They cannot accept demand deposits. This company will not assure the deposit holders that we will return you back money on demand. No, only term after a period of time. So, but all the NBFCs will not accept. Some NBFCs will accept the deposits. Some other NBFCs, they will not accept the deposits. Now, next is they do lend the money. They won't accept the deposits, but they will lend the money. That means from different sources they will acquire the money, like from term deposits or any other source. They will procure the funds and they will provide this in terms of loan, or they are intermediary between the loan procurement of companies. Now, however, unlike a bank, most NBFCs specialize in certain type of lending. The bank's activity is accepting the deposits for the purpose of lending. So lending is one of the main activity of a bank. Similarly, NBFCs also the main activity is lending. They are also subject to regulatory provisions. That means they are not outside the ambit of law. All the NBFCs must be governed by the provisions of law. Now, as per the RBI, Reserve Bank of India, the Reserve Bank of India has given the definition of the term NBFC. So, NBFC is a company registered under the Companies Act. It is not a statutory company. It is just like any other company which is registered under the Companies Act and is engaged in the business of. Now, what are the activities that can be taken up by NBFC? So, what are the activities that will be taken up? The activity that is engaged in the business of loans and advances. First of all, the activity of the NBFC is to extend the loan, to provide the loans and advances. Acquisition of shares, stocks, bonds, debentures or securities issued by government. So, what is the activity of this NBFC? First of all, they are engaged in the activity of giving the loans or advances, or in the acquisition of shares, stock, bond, debenture or any other securities issued by the government or local authority or other marketable security of like nature. So these companies can acquire or they can sell the shares, stock, bonds, debentures, securities which are issued by government or any other local authority or any other like nature of securities or of a like nature. Leasing. Next one is leasing, hire purchase, insurance business, chit business, but does not include any institution. So three things. First of all, these NBFCs are engaged in extending the loans and advances. First thing. Second thing, they are engaged in acquisition of shares, stock, bond, debentures or any securities issued by government or local bodies or like nature of such securities. And thirdly, leasing, hire purchase, insurance business, chit business, but does not include any institution whose principal business is that of agricultural activity or industrial activity or purchase or sale of any goods other than securities. That means that NBFC does not include the activity of agricultural activity, then industrial activity or purchase and sale of any goods other than security. Security they can purchase and sell, but other than security, the goods, they cannot purchase or sell the goods. They cannot deal in agricultural activity. They cannot deal in industrial activity. So this is the complete definition given by RBI on NBFC. Now, RBI has further extended the definition of NBFC. Basically, the RBI has given this definition of NBFC, but later on, the RBI has extended the definition and includes some more activities in NBFC. As the company is having principal business of receiving deposits under any scheme or through any arrangement in one lump sum or in installment by way of contribution or any other manner. Earlier, the RBI has not included the activity of accepting deposits by NBFC. The NBFCs are prohibited from accepting deposits initially, but later on RBI has extended the definition. Now RBI has given the permission to NBFC to accept the deposits, under any scheme. Accepting the deposit under any scheme, whether accepting in lump sum amount or in installment amount by way of contribution or any other manner. So this is the complete definition of NBFC given by RBI. Now NBFC play a very important role in the smooth functioning of banking and financial services industry. Nowadays, this banking and financial service industry, this NBFC is playing a very important role, because these NBFCs are also engaged in the financial activity by providing the loans and advances, by accepting the deposits. Now, they provide alternate source of finance and extended credit to sectors who do not qualify for traditional bank loan. There are many organizations, business houses, they cannot fulfill all the terms and conditions of getting the bank loan. In that situation, this NBFC can come to the rescue of those business houses which cannot be able to get the direct loan from bank. So this NBFC can help the financial sector, can fill up the gaps wherever there is lack of funds through traditional manner. Now, they are innovative, operate more efficiently and deliver customized solution to their clients. There is no standard format of extending the loans. These NBFCs are more innovative, efficient in their operations, and also they will provide the service according to the requirement of the customers. Customized services they can provide. They reduce the layers of intermediation. In the normal procedure of taking the loan from bank, so many intermediation is there, and so many intermediate costs will be incurred. So all these intermediation cost can be eliminated, avoided by this NBFC. So there are higher yield to investors. So whoever is investing in this NBFC, they will get a higher yield, higher return, and also the user of funds, they will get the funds at a lower of borrowing cost. So both the parties are getting the benefit. The investors in NBFC, they are getting higher yield, a return, higher return on their investment, whereas the companies which takes the loan, which borrows from NBFC, they will get borrowings at a lower cost. So both the parties are satisfied, both are benefited from NBFC. Now, however, nowadays there are many small organizations that cater to the informal sector and escape regulatory oversight. In the previous video, I have explained you the loopholes or drawbacks in Indian financial system. There are many organizations who are playing in this financial sector, but they are outside the ambit of law. They are not under the provisions of law. They are providing the loans informally at a higher rate of interest. And their deficiencies, working will come to surface only when scam happens, any one of the scam happens, they will come to the surface. Otherwise, they are escaped from the law. So these small industries, these small organizations are disturbing or taking the risk to the whole industry. So, however, there are small organizations that cater to the informal sector and escape regulatory oversight. Their operations are not transparent and come to light when they are scams. Actually, how they are performing their activities, that will not be transparent. We cannot be able to know internally in a hidden form. They are providing the finance at a higher rate of interest. But ultimately what will happen? Their activities will come to surface only when some scam happens. Ultimately, who will lose the money? The public will lose the money. They can create a systematic risk to the entire industry. So they are making a bad name to financial sector by these small organizations which are informally providing financial services. What will happen? The people will not have the faith in the financial system if these small organizations will dupe the people by accepting deposits or giving the loans. So I have explained you about the meaning of the term NBFC, non-banking financial companies. Now the last and final topic is, what are the different types of NBFCs? So NBFCs are categorized into deposit accepting and non-deposit accepting NBFCs. Broadly, we can divide the NBFCs into two, accepting and non-accepting. Some NBFCs will accept the deposits and some NBFCs will not accept the deposit. But for accepting the deposits, the NBFC have to take the permission approval from RBI. Now, there are certain NBFCs that accept from deposits from the public. However, they are not allowed to accept savings and demand deposit. RBI approval is necessary to accept deposits from the public. So, they can accept the deposit only for term period. They cannot accept the deposit from saving account or from current accounts. Only for term deposits, they are eligible to accept, provided they must have the approval from the RBI. Now, the following are the different types of NBFC. The first, we will broadly classify the NBFCs into 4 categories. Financial companies, non-financial companies, then we have residuary companies, and lastly miscellaneous finance companies. In this way, broadly 4 categories we divide. First, we will discuss about financial companies, non-banking financial companies. The equipment leasing company, hire purchase finance company, and housing finance company. These 3 companies are categorized under financial companies. What do you mean by equipment leasing company? Nowadays, this leasing finance is becoming more and more popular in every country, even in India also. So many companies are taking the asset on lease. So there are some companies which provide the assets on lease. They will purchase the assets and they will provide these assets to the lessee on lease. In the previous video, I have explained you about the concept of lease and what are the advantages, disadvantages, types of lease, all these things I have explained. The leasing company is one of the financial company. Any company which carries out its principal business, the activity of leasing of equipment or financing such activity, not only engaged in leasing, but also engaged in financing the leasing. In financing the leasing, that business is called equipment leasing company. Next is hire purchase finance company. Some companies are there whose principal activity is to provide the assets on hire purchase, or the companies which help, which finance this hire purchase. Directly they are not engaged in hire purchase, but they are engaged in financing the activity of hire purchase. These businesses will come under hire purchase finance company. So any company which carries out its principal business of hire purchase transaction or financing such transaction, not only dealing in such type of transactions, but also financing such type of transactions, that will come under hire purchase finance company. Next is housing finance company. Nowadays, this type of companies are also being emerged in the market. Housing finance, they are providing the finance for the need of houses. There are many customers who want to construct their own house, who wants to own a house. For that purpose, they want the help from companies in the form of loans. So some companies are there which are directly providing finance to housing purpose, or they are helping in financing for the purpose of housing activity. They are called housing finance company. The first category I have explained, that is financial companies. Now I am coming to the second company called non-financial companies. Again, we have 2 types of non-financial companies. The first one is investment company. Any company which is engaged in the buying and selling of securities. Buying and selling of securities. So any company which purchases and sells underwrite securities, creates a market for government security, is known as investment security. So any company which is engaged in buying or selling of any security or providing arrangement for purchasing the government security is called investment security. Second one is loan company. Any company which is engaged in providing the loan to different needy people like wholesalers, retailers, or self-employed, to all these people, they are providing the loan. So any company which carries out its principal business in providing of finance loans for any activity is known as loan company. They provide loans generally to wholesaler, retailer, small traders, or self-employed people. So I have explained you the first financial companies are 3 companies: leasing company, hire purchase company, or housing finance company. These are finance. And non-financial companies are investment company and loan company. Now third one is residuary company. Residuary company means any company which does not fall in financial and non-financial company, but it is engaged in the financial activity. So the company which does not belong to any category mentioned above is considered as residual, non-banking company. It carries out its business but different names in different regions. The activity is financial activity only, but the name is different in different regions. So any company which does not fall in the first and second category is called a residuary non-financial company, non-banking company. Now, last one is miscellaneous finance companies. Miscellaneous. We don't have any limited activity, unlimited activity. That means here the law says any activity which is related to finance but not confined to any other activities can be put under miscellaneous finance companies. Miscellaneous non-banking company. Again, these miscellaneous finance companies are divided into miscellaneous non-banking companies and non-banking non-financial companies. So first of all, miscellaneous non-banking company, a company which carries out its business on managing business, conducting or supervising as a promoter, agent of in a transaction in a form of chit fund is termed as miscellaneous non-banking company. So any company which is engaged in controlling, in managing, in promoting a business or in chit fund business, that is termed as miscellaneous non-banking company. Last and final is non-banking, non-financial. Either it is neither banking company nor a financial company. Where it is not banking, non-banking and non-financial company, it means any company. That means the company may be engaged in agriculture industry or agriculture sector or industrial sector or tertiary sector regarding goods purchased or sold. All other companies will come into non-banking, non-financial companies. Any company which carrying out its principal business activity in agriculture operations or trading in goods or services or real estate and is not related to financial or miscellaneous or residuary non-banking company is known as non-banking, non-financial companies. That's it. So this is the last video on unit number 2. So I have explained you the meaning of the term NBFC and what are the types of NBFC. So watch the video, every video till the end. If you are satisfied, give a like to the video, share my channel among your group, among your friend circle so that more students can watch the video and enhance their knowledge. Give your comments. And lastly, if you have not yet subscribed, do subscribe my channel. Visit the playlist and see what are the different subjects we have in our playlist. Select your subject, select the videos, watch the videos, enhance the knowledge. Inshallah, we'll continue the next topic in the next video.